So folks, wow, we just got a dumpster fire of a quarter out of Amazon. I'm going to take you guys through the numbers, how bad this quarter really is, okay? This stock is down absolutely epically. And people are looking at this and they're like, okay, is Amazon stock a buy now? Are you waiting on this? Like, kind of what's my view on that, right? So I'll share all that in this video. We're going to go through the numbers, extremely troubling numbers out of Amazon. I got to be completely honest and show you everything I'm looking at here. And if I'm going to be buying the stock, not buying the stock, and my opinion on that, okay? We also got a couple other stocks to talk about in today's video. Very busy video, as all the videos have been recently, because it's earnings season, if you didn't already know, and it's absolute craziness out there. Hope you guys enjoy this. Thank you everybody that's subscribed to the channel, as always, okay? So first off, in regards to Amazon after hours, the stock's been down anywhere from like 14% to, I've seen it down as much as 20% after hours. So we'll see where this baby shakes out at tomorrow, but it's likely going to be under $1 trillion market cap for Amazon, which we haven't seen it under $1 trillion boys club in quite some time. But tomorrow it looks like it's going to be there, and certainly after hours it's been way below that. Okay, now Amazon is back to levels, right? Because the stock's been trading at $92, $93 roughly. It's back to levels that the stock was last in summer of 2018. Summer of 2018. I mean, it's lost years and years and years of gains with this stock, right? Everything that, you think back to, obviously, Rona, right? And everybody being forced to be home and having to order, most of their stuff on Amazon, right? And you think about all that benefit and all the money they made and all the revenue that came in, right? And all the net income and all the cash flow. And you think about all that, right? And all the progress the business has made over the last 4 years. And despite all of that revenue, all that net income, all that cash flow, and all the progress, it's all been wiped out in regards to stock price. That is pretty darn amazing when it comes to a company like this. It's all been just completely wiped out now at this point in time, right? And as of after hours, this stock just went into the down over 50% club. Okay, so welcome Amazon to the down over 50% club. In 11 months, the stock has fallen. Okay, now think about this for a moment. This is very important for everybody watching this, right? We've seen so many stocks fall into this down 50% from their highs club, right, over the past 11 months. But have we seen a more important company enter this club? And I would say no. This is the most important company to have hit this down 50% plus club, okay? We've seen NVIDIA do it. We've seen AMD do it. We've seen Meta do it. We've seen Shopify, stocks like that, Netflix. We've seen countless of those stocks fall to this club of down 50% plus in less than 1 year. But we haven't seen as important of a company hit there until Amazon now at this point in time. And it is there, man. It is there. Absolutely incredible to see that, okay? Now, before we get into the numbers, I think it's very important that we just kind of set this up. We understand, right? Amazon is not necessarily a cheap stock, right? If you look at price to sales metrics or PE metrics, it doesn't really matter what you want to look at, right? If you look at free cash flow versus what the company trades, it doesn't matter what metric you look at. Amazon's not a cheap stock, okay? And so going into in earnings when you're not a cheap stock, especially in a scary market, you better come in, you better report greatness, okay? And the company did not report greatness. Earnings came in at 28 cents a share. Revenue came in at 127 billion. 127 billion was expected. Okay. Amazon Web Services missed a little bit. Okay. Advertising beat a little bit. Okay. The big problem was the guidance, right? Because we know they had two different Prime days in the last quarter, which was very, very strange that they did that, right? But here we are, and look at this, right? Amazon said it expects to post fourth quarter revenue between 140 billion and $148 billion. So basically midpoint's about $144 billion there is what they're really expecting for their revenue, representing growth of 2% to 8%. Oh boy. Yeah, this is Amazon. 2 to 8% is not going to cut it. Analysts were expecting sales to come in at $155 billion. What? So that means Amazon is expecting revenue at midpoint, $144 billion, to be $10 billion plus off of what analysts were expecting. I repeat that one more time. Over $10 billion. That's over $3 billion of revenue a month shy of what analysts were expecting. That's insanity, okay? That is Okay, that's awful. I mean, people were talking about how bad, Meta's numbers were and how bad Google's earnings were, right? And those were really bad. But gosh, over $10 billion expected miss on revenue from what analysts were expecting. That is like a mile away. Okay. And now I see why the stock is down the most we've seen it down in like a long time, like 15 plus years, right? Now, if you dig a little deeper in the numbers here, what we're going to see is revenue was up about $16 billion roughly. Okay. So that's good. Yeah. I mean, great. We see Amazon growing about $16 billion in a 3-month span. It's phenomenal. Amazing. Okay. The issue is, you want to know what big money is up to with your stocks, you have to download the app I'm showing you right now. It's called Tendies.af, and it allows you to see unusual options flow data for free in relation to stocks you might be looking into, stocks you own, right? So let's go ahead and take a look. Let's say you owned Apple stock. You could type in Apple ticker symbol here, and we can see unusual options activity in relation to Apple right here.
Tendies is a social trading app that's giving away hundreds of dollars worth of tools for free, saving you hundreds per month if you look at what other services charge for the same stuff. I personally love the options flow, which is unbelievably helpful at predicting price movements in the options market. I also want to show you Brokerage Connect, where you can integrate your portfolio so you can monitor your performance and do the necessary research to be profitable in this environment. All the due diligence in one place, and you have access to constantly refreshing feed of information relevant to you in your portfolio. So make sure you click the pinned comment down there to get free access to all of this I showed you in this video here today. That will be pinned comment.
Total operating expenses was up about $18 billion. So especially in a more mature-ish company like an Amazon is, which I would definitely put in that category, right? You never want to see their operating expenses exceed whatever growth they had in revenue, right? Especially for, once again, a mature company like an Amazon. But that's exactly what we see played out here, okay? Operating income was down $2.3 billion in the quarter. So wait a minute, operating income is down $2.3 billion, but yet the company just grew revenues by over $16 billion? Red flag. Very, very bad there, okay? Now, they had this one-off total non-operating income expense they had. Basically, last year they had something work against them for about $500 million. This year they have something work for them. Well, that's a one-off. That's a $400 million gain, right? And then benefit or the provision for income taxes, last year they had working against them $1.1 billion versus this year almost nothing. So it makes net income look like it's not down as much as it really should be. Net income should be down. The difference between what they had last year coming in for their real income versus, what it should have been, right? Versus this year, it's a massive difference, right? But even with all the little things here, these one-off things that were helping them, net income still was down. And once again, that's down off of revenue that was up over $16 billion. That's a disaster. So this past quarter is bad. And in terms of next quarter, expected to be even worse, right? And so that's a real problem when you really dig into these numbers. It's downright scary here, okay? Now, that's not even the worst part. What I'm showing you right now, this is the worst part. Operating income in the quarter is expected to be between $0. Yes, you heard me right. $0 and $4 billion compared to $3.5 billion in the fourth quarter of 2021. Wait just a minute. Operating income expected to be a possibility of $0? So the midpoint on the operating income is $2 billion, right? That's the midpoint. So that's the way you really want to look at this. Like, what do they actually expect? Midpoint, $2 billion. So that would be down, 40-something% year over year? Operating income? Oh boy, okay? That's no bueno. And this just shows you how kind of unconfident the company is in whatever's going on, that they would put operating income that has a realistic possibility of $0. $0. Holy smokers, this ain't no dang joke. What in the world is going on? That is no bueno, okay? Now, digging in here a little deeper, this is bad, just as bad, if not worse, right? North American sales up very nicely. And this is all the traditional businesses. So that's great. North America sales being up like that, right? The problem is, look at operating income. It's from a gain to now a loss of $400 million. That's a problem. International, things are really ugly. So international net sales just dropped, $1.5 billion roughly for net sales there, right? And look at operating income. They were already losing money, which still baffles me how they were losing money in this same quarter last year of a little under $1 billion to now almost $2.5 billion loss for operating loss. oh my gosh, so international is a mess for their business, right? The only thing that's carrying Amazon, and it's carrying us on its back right now, is Amazon Web Services. Amazon Web Services is the only reason Amazon's probably not down 80% right now. Just to be honest, like why is the stock at 90 something dollars a share after hours and not $50 a share after hours? One word, AWS. Amazon Web Services, okay, maybe that's 3 words, okay? Amazon Web Services is carrying this company on its back right now. Amazon Web Services net sales went from 16 billion to 20 billion, and operating income did go up by about $600 million for Amazon Web Services. That's got this whole company on its back in the short term here. Absolutely amazing. So, man, really, really just troubling numbers, and it leads you to think, okay, when does this fix itself anytime soon? Just to be honest, does it fix itself anytime soon? Because here's the thing with Amazon, right? We've watched this company over the last 20 plus years, and even since I've been in the stock market in 08, 09, so about 14 years, I've watched this company get bigger and bigger and bigger, right? And you watch this company, hatch up right before the tech bubble, and you watch this company grow. You watched it go down 90% in the tech bubble, right? Then to come back and stage, obviously, an absolutely insane epic rally and become one of the most well-run companies in the world, one of the most important companies in the world, and a $1 trillion plus company. And at its peak, it was around a $2 trillion company, right? And so we've watched all that play out. But the problem is Amazon has gotten so massive now at this point in time that Amazon, unfortunately, if the economy gets weak or weaker, Amazon's numbers can't withstand that. And because it's so big now, it's almost like its own country. Like literally, that's the way you could almost look at Amazon. It's almost like its own country. So if everything contracts, unfortunately, it's going to contract Amazon numbers. There's certain companies that regardless of what happens in the economy over the next 1 to 2 years, they're going to grow amazing. Okay? Companies like Shopify come to mind, companies like Netflix come to mind, companies like Fubo TV come to mind, several other stocks I own will come to mind that are going to grow regardless of what happens in the economy over the next 1 to 2 years. Because Amazon has gotten so big, it does not fit that category anymore. The old Amazon, it didn't matter. For Amazon in 2008, 2009, they had very nice growth. So despite the economy being a mess in 08 and 09, Amazon was growing. They're putting up record quarter. Because at the end of the day, for Amazon, they were so small, they were going to grow regardless of what happened in the economy. It didn't matter that unemployment went to 10%. Amazon was such a growth engine back then, they're still going to grow. It's a very different scenario in this mess than what Amazon was back in 08, 09. And it's a very different scenario than the stock was back in kind of the tech bubble days, okay? And so I think that's very important for everybody to understand that. It's the law of large numbers catches up to you eventually over time. And that is exactly what we're starting to see play out in Amazon. And if you are thinking about the economy deteriorating in a much more substantial way over the next 12 months, if you are of the belief of that, Amazon numbers will get far worse. If that's the case, okay? Now, if you think the economy is going to be okay, then Amazon should be okay. But if you think the economy is going to get much worse, unemployment is going to go much higher, there's going to be problems out there, bankruptcies, things like that, then that's a scenario where Amazon's sales will continue to get hit actually worse than what they're already being hit, and where they start coming in at the low end of their guidance or maybe even start missing their guidance, okay? Now, for me, in regards to Amazon, is this stock a buy in 2023? I think absolutely. There's a stock that I'm looking at definitely adding shares of in 2023 and building out to be a very good size position. I would love to build Amazon into a 6-figure position in 2023, maybe something between $100,000 and $200,000 for myself in regards to Amazon. And so, I'm not going to be in a rush to buy shares of Amazon because there's obviously a ton of stocks that are heavily discounted that I have my focus on for the remainder of these last couple months of this year. But in 2023, I think I could build out a pretty nice size position of Amazon, which I've never had a big position in Amazon. So this would be, I feel like 2023 is my opportunity to get a big position built in Amazon and be very, very happy. I think it's going to be obviously tough sledding for the company. And, I think there could be several quarters of disappointments on certain metrics. Sometimes it's going to be revenue, sometimes it could be margin, sometimes it could be things like operating income or expenses, things like that. It's, I think it's taken a little while for them to feel it. There was a moment in the market, right, when a lot of the more riskier stocks, the more higher growth stocks got hit first. And meanwhile, stocks like Amazon still kind of trucked along pretty decent. those stocks are all feeling the pain now. All these big techs, you've seen them report quarter after quarter after quarter recently. Guess what? Boom, boom, boom. They're all going down, and it's getting worse for them. That's the thing. And in regards to all these big techs, it's getting worse. It's not getting better. Maybe in a couple quarters, 3 quarters, 4 quarters, it starts to get better. But right now, it's not getting better for these companies. It's getting worse. Their businesses are deteriorating massively versus the previous quarter, And we're seeing that play out for all these big techs now at this point in time, okay? Next up here, Shopify. So Shopify was up massively today. Congrats to anybody that's been buying the dip in Shopify over the last few months. Stock's up 17% here today. They reported a much better loss situation than expected. So they lost 2 cents versus 7 cents was expected. Revenue came in at a slight beat there. It was up 22% versus same quarter last year. It's amazing. Good, solid quarter. And Shopify also said the strong US dollar weighed on its sales. So it would have been even in a much better scenario if it wasn't for the US dollar hurting them, right? But that could be said for almost every US or North American related company right now, right? So in regards to Shopify, when you're a stock that's priced for devastation and you come in with things just a little better than expected, your stock flies, right? That's all Meta had to do yesterday. All Meta had to do yesterday was not report a dumpster fire, and that stock would have been up 20% plus tomorrow, or today, excuse me. Instead, Meta came in and obviously reported a dumpster fire, and look what happened to their stock. All Amazon had to do, and Amazon hasn't been hurt as mad, but Amazon, if they could have just came in with a decent quarter, decent guidance, their stock would have been up 5 or 10% after hours today. But instead, they came in with dumpster fire guidance and just horrible numbers in general, and look what happens to the stock, right? And so Shopify comes in with just decent, and boom, stock's up 17%. It doesn't take much when your stock's beaten down dog stock, right? And, if you look at Shopify, this is still a stock that's down around 75% year to date, around 75% year to date, despite the 17% move, right? And despite a massive move from its lows it reached a few weeks ago when it was $25 a share. And so something I look at in Shopify is, this is a stock I've bought recently. My cost basis on this one's $32.39. I got 777 shares so far. I wouldn't mind building Shopify into a bigger position, to be honest. I think this is just a company that's going to thrive over the next decade. I think they're going to, what I viewed Amazon was as probably the last recession. I feel like, Shopify's that now in terms of a company that's just going to grow regardless of whatever's going on in the macroeconomic landscape. Now, obviously, the stronger the economy is and all those sorts of things, the more it's going to help Shopify. We all know that, right? But even in a weaker scenario, I still see Shopify being in a pretty good position. My hard thing for me in 2023, let's say, for instance, is which one do I add? Do I add Shopify or do I add Amazon? And if I do, how heavy do I add them? Do I buy them both, right? That's a tough thing for me to figure out. What I think I'll probably do in 2023, I think I'll probably build both into a pretty good size position. I would say I'm more bullish on Shopify for the next 5 years. But with that being said, I think Amazon comes with less long-term risk than Shopify, right? And that's kind of natural with all growth companies. Usually they're going to come with a little more risk than the other. So that's my view on Shopify. I really like that one. I'm going to probably build that into a pretty nice size position for myself next year in 2023. And Amazon, I'll probably build that into a very nice size position. I can see both of them probably being 6-figure positions, and I'll kind of diversify a little bit. You don't get many opportunities in the e-com space to buy these stocks for heavily discounted prices. 2023 is one of those years you get this, a big opportunity kind of in front of yourself to build out pretty nice size positions with all those e-commerce names in general. Etsy is also interesting as well. It's just, although that one's really intriguing to me also, and I'm going to have to consider it, I think I'm going to probably focus my money on Shopify and Amazon in 2023 from e-commerce side, okay? So Apple reported what I call a baloney quarter, okay? A baloney quarter. So what do I mean by that, okay? Is basically they had a bunch of things kind of helping things out, including like an extra week of sales and stuff like that. So iPhone revenue was up about 10% year over year. Mac revenue was up about 25% year over year. I call this a baloney quarter because I don't think this is sustainable at all. And I'm very confident that iPhone revenue is likely going to go negative for the company in 2023. So they just finished out their fiscal fourth quarter. So in their fiscal year, I think iPhone revenue is going to go down. In the calendar year, I think iPhone revenue is going to go down as well. I don't think you can get any gauge, just to be quite honest, about I wish I could say opposite of that because I own a company named Skyworks Solutions, which is a big semiconductor company that sells chips directly to Apple. But in just my opinion, just kind of looking at this and seeing how weak other big tech companies earnings are, right? And then also I heard Apple say on the conference call they're expecting sequentially revenue to go down. You know, they weren't too specific about that. We know Tim Cook, he's a little bit of I don't want to call him a pumper, but he's always gonna pitch things the best way possible. That's him, right? And so I don't think he understands. Here's the bottom line: if you were bearish on the economy, there's no way, you know, for 2023, there's no way you can be positive on Apple selling $1,000 plus iPhones and these Macs, right? The Mac business has a lot of headwinds going against it, right? Although a lot of people already upgraded Macs, obviously, over the past few years. So that's going to be working against them in 2023. The other component of that matters in a significant way, who makes up a ton of Mac business? Oh, guess what? It is companies. And if companies are pulling back, do you think they're going to get their workforce all a bunch of new Macs and MacBooks and stuff like that? No, they're going to try to get every dollar they can out of that. And it's like, hey, you know, my MacBook's not quite working as fast as it used to. Can I get a new one? No, I don't think we're going to go spend $2,000 on that right now. If companies pull back, they're going to pull back on those sorts of expenses and only spend if they have to, right? Same thing with consumers. And in terms of the first few months for iPhone sales, who buys iPhones in the first few months? People that have a ton of money. And so you can't really get a real gauge on how iPhone demand is, in my opinion, the first few months a company comes out, Apple's iPhones goes on sale. Because everybody with money that has a lot of money, right, they go buy one. But you get the true demand of iPhone as the season kind of ticks on, right? And especially as you get into the spring quarter, that's when you find out how strong is this demand really for this iPhone? Because that's when people that have money have already bought it, right? And the influencers that always have to get the newest iPhone. Like I bought one of the iPhone 14s literally just because I do short form videos and the front camera is better than the old front camera, right? You can't just be counting on people like me to go buy your new iPhone when you are as big as Apple is. You've got to have the masses go buy it. And the fact is you get all the people with money, influencers, all those sorts of people to buy the new iPhones the first month or two they come out because they need the best microphones and chips and blah, 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 right? After that, then it's like, okay, let's see who's really coming to these stores to buy these iPhones now at this point in time. Now the people with the big money already bought them. Wonder how that's going to play out. So I got to say, although I would love to say iPhone's going to be a beast over the next year, I just don't feel confident in it at all. And like I said, I own Skyworks Solutions, which is a fairly big position for me. So I would love it if phone demand was amazing over the next year. I just don't see it. Same thing with their Mac business. And services is starting to be in trouble. I mean, services revenue only grew 5% year over year. This was the big growth engine for Apple. So that's concerning. I would call it very, very concerning in regards to Apple. Hope you guys enjoyed today's video. As always, attendees, make sure you take advantage of that. That is pinned comment down there. It's absolutely free to use. And you'll be able to see all the big unusual moves in regards to stocks you own out there, which I think is pretty darn awesome. Much love as always, guys, and have a great day.